Welcome to Equity Mates. My name is Bryce, and for what is fast becoming one of my favourite segments of the week, Watchlist Wednesday, I'm joined by my equity mate, Ren. How are you going?
I'm very good, Bryce. We don't have a lot of permanent segments, so it would be hard for it not to be your favourite.
True.
But it is definitely the best time of the week. You know, Wednesday, hump day. You've made it to the end of it. Now settle in for the best 15 minutes of the day as we speak to one expert investor and find out 3 stocks on their watch list.
Absolutely. So without further ado, it is my pleasure to welcome to Equity Mates a good friend of the show, Owen Raszkiewicz from Rask Australia. Owen, welcome.
Thanks for having me on the show, guys. I love the new segment.
Good to hear. So Owen, you've as is the segment, we like to pick the brains of some experts as to what is on their watch list for good or bad. Obviously, hopefully for good, but you've brought 3 stocks today. Pinterest, which is over in New York. We've got Australian Ethical and also Volpara. So we may as well start at the start with Pinterest, a company that, to be honest, I haven't really given much interest to. So if we start at the top, why is Pinterest on your watch list?
Yeah, so people will know Pinterest as kind of this visual search engine. It's a platform, it's an app, it's a website, it's a place that you go if you're looking for inspiration. And inspiration comes in many forms, but on the Pinterest platform, the most popular boards are boards relating to food, to travel, to weddings, and to home decor, and even things like renovation. So for example, recently my partner and I, we began a renovation, and you go straight to Pinterest, you pin your favorite photos, you see what other people are doing, and then you get some inspiration from them. And for anyone who's had a wedding, done a renovation, done any of that sort of stuff, you will know that it's extremely expensive. So for advertisers, they're willing to pay to get their product on some of these boards and pay Pinterest via the platform, to get exposure to those consumers. So you can go on there and you might see 20 search results and maybe 2 of them are ads, similar to the way you would see an ad on Facebook if you're scrolling through, or TikTok or Twitter or something like that. So it's a really interesting business. It's a business that, for the most part, people in Australia don't have that much exposure to unless you're quite creative. It tends to be a more female-orientated platform as well, just because of the types of things that people are searching for. So it probably doesn't surprise me too much, Bryce, that you haven't been on there recently. But I'd be willing to bet in a few years you'll be paying it a bit more interest.
What are you saying? It's going to happen in a few years' time, Owen. Or you think I'm going to do a renovation or get married? Both
both are quite likely, I think. Now, Owen, Owen, we've seen some social media platforms absolutely kill it as businesses, namely Facebook amongst them. But we've also seen some social media platforms be incredibly strong businesses with incredibly strong network effects, but maybe not perform as well in the share market. And Twitter is the main one that comes to mind. Pinterest, as you just explained, is obviously a great social media platform. How do you think of it as a business, and what makes you think it will fall in the Facebook category of well-performing stocks rather than the Twitter category of perhaps underperforming stock?
Yeah, it's a great question, because we can all love and admire products, and we can think of a host of different products that we use in our everyday lives, and the businesses are absolutely horrible because they're in competitive industries or what have you. Maybe management just hasn't executed. Now, the Pinterest platform is really interesting, right? Because around 90% of users that leave the platform leave feeling happier than when they went there. Now, if you think about Instagram or Facebook or maybe even Twitter, I don't know about you, but I tend to go there and I'm not always in the greatest of moods when I leave. And another interesting fact about the Pinterest platform is that around about 91% of people that go there say that it is a source of happiness and inspiration. Now, I've never said that about Facebook. Maybe on the off chance I might have said it about Instagram, which is owned by Facebook. But one of the things that management have done really well recently, and something that I was pretty skeptical of last year, was they spent about $1.2 billion, that's in a single year, on research and development. And so you think, okay, what on earth are they building for $1.2 billion? And what they were building was effectively the back end. So users have been able to go, I think since 2009, been able to go to Pinterest.com and see boards and see images. But it's really only been in the last year that they've invested significantly in making it Facebook-like on the back end. So you can go up there, upload your ads, pick which interest groups you want to target with your ads and so on and so forth. And in just under a year, they've had a 600% increase in the number of businesses that are trying to target consumers via the platform. And so when you look at that, what that ultimately translates to is more ads in the same amount of spots, which then drives up the cost of each ad spot, and then in turn, the average revenue per user. And so we've seen, in loose figures, we've seen Pinterest go from around about $1.03 average revenue per user per quarter to around $1.57 6 months later. So that's about a 50% increase in the revenue the business is generating from users. And now there are more users than ever on the platform.
Can certainly see why this is on your watch list, and I feel like it's one that we will add to ours because, as I said, something that I hadn't really come across before. Let's move on to the next one, Owen, which is Australian Ethical. The ASX ticker is AEF. Again, what is it about Australian Ethical that lands it on your watch list?
Well, this is a good one because it says it on the tin. Australian Ethical, it is a business that is involved in ethical investing. So they're probably, I don't know if they're the oldest ethical investing funds management business in Australia, but they're certainly the most prominent. And since about the 1980s, Australian Ethical has been using its Australian Ethical Charter, which is a charter that's kind of enshrined in the business to do good when you allocate capital. So basically what they're trying to do is they're trying to exclude companies that are, and I'll use air quotes, really bad, and invest in companies that are trying to do really good. And there have been studies that have come out in recent years that have shown that it doesn't cost you the earth, if I can use a pun, to invest ethically. In fact, many of the studies show that investing in businesses that take a sustainability bent, so if they think about more than just shareholders, they actually perform better than your average company. And so the way Australian Ethical solves this problem for investors trying to invest sustainably or ethically is it does it in two ways. It's just like a traditional funds management business. The three of us could go up, write a check and say, I want to invest in the Australian Ethical Shares Fund, and we could put money into it. But we can also put our super in there. And what I really like about Australian Ethical is that it's actually started to focus more heavily on the managed funds and less so on the super. And super is a really competitive part of the funds management industry. So I'm looking forward to seeing that transition.
So Owen, ethical investing is one of the biggest topics in the Equity Mates community. It's everyone is looking on what companies are ethical, how can they invest their money ethically. So I think this is touching on a really important theme. I guess the question is Australian Ethical on your watch list because it's got that industry tailwind, or is it something about the business itself that you think it'll execute better than some of the other ethical fund managers in this space?
Well, that's a great question. It's performed really well, right? And moving super funds is particularly for younger people, where they say the average balance is between $30,000 and $40,000. Moving super funds is often the most dreaded thing ever. You'd rather go out and do 101,000 other things than sit down and look at your super account and change super fund. But what we're seeing is more consumers switch to Australian Ethical because of that focus. So I think it's kind of like, one and the same. We're seeing the industry as a whole have a lot of focus put on it because of what you can do with your money, but also because it is a good product in the sector. And I think, when it comes to ethical investing, you want to invest in an institution that lives up to what you expect it to live up to. So, for example, donating some of that money or that profit that they make each year to not-for-profits. That's one thing that they do. And so Australian Ethical, and I know you guys know this company really well, which is Magellan, which is kind of the flagship funds management business in Australia. Now, I'm not saying Australian Ethical is the next Magellan, but what I am saying is that in a side of funds management business, and you guys know this really well, once you hit a certain point, the extra revenue that you get from more members joining and from more investors taking part in your fund is that it hits something called operating leverage, which is where just profits begin to gush in the door. And it becomes this business which is just insanely profitable. So, Australian Ethical has its risks. You've got to be mindful of performance fees going down or competition, but we really like the business and we like the industry. The problem for us with Australian Ethical, this is the only one of the three that I don't own. So I own the other two on the list today. But the reason I don't own this business just yet is I think the shares are quite expensive. So I'm waiting for some sentiment to come back in that's quite negative so I can take a position.
Yeah, it's an interesting one, given also the availability of ethical ETFs that are out there and the rise of, we've got Future Super as well that's in that ethical space for superannuation funds. You would expect that the competition in this space only really becomes more intense. But interesting one to watch. Let's move on to your third and final, Owen, which was Volpara. The ASX ticker is VHT. Again, it's on the watch list. Why is that?
It seems to be a recurring theme, but the three, and I didn't do this on purpose, but the three companies on the list all make people feel good or feel better, and they provide a service to society that actually does something good. So let's just keep that in mind. But
you can tell you've been in lockdown in Victoria for a long time, Owen.
I'm touching for anything. So basically what we're looking at here is a technology business, a medical technology business. Now, this is a business that's kind of a bit odd because it's based in New Zealand, listed in Australia, but it does the most of its business, predominantly all of its business in the USA. And the original research came out of the UK. So it's kind of all over the shop. But if you think about this, right, 40% of women around the world have what's known as dense breast. Now, if you put a dense breast through a mammogram or x-rays, for example, what you might see is a lot of white space. And what that actually is kind of the density of the breast, right? But the problem that radiologists and doctors have is that when they get back a scan, they can't necessarily see where a tumor, like a breast cancer, whether that's early or late stage, is. Because it's all kind of white space, it can be visually impaired. So what Volpara was built upon was mathematics and early research in the 2000s to try and solve this problem quantitatively and to tell women if they had dense breasts. Because as I said, 40% of women have dense breasts, and by that I mean a category D breast. But within that, they're 40% more likely to get breast cancer. So not only are they the hardest to detect, they're also the most vulnerable to breast cancer. So Volpara's mission is about saving lives and making money. It's a software business, and in recent years, the business has gone through this transformation where it's gone from just reporting breast density and giving women a score to trying to predict their risk of breast cancer, telling them how often they need to go see a doctor, how often they need to go see scans. And one final comment that I'll tack on the back here is, as I mentioned, it does a lot of its business in the USA. And what we're expecting to see over the next 1 to 2 years, I'm going to give it quite a long window, the next 1 to 2 years, is we're expecting the entirety of the USA to mandate throughout all the states that women be told their breast density and what it means. Because at the moment, in some states, when you get a scan as a woman, you don't have to receive that information. So you wouldn't even know. And even if you do get it in some states, you're just bamboozled by all the jargon. You don't know what it means.
That's really interesting, Owen. So on that point around the changing rules and I guess the government regulation of breast scans, I guess where does that idea come from that you expect it to be mandated, and then how do you build that into your investment thesis? Like, how do you build in the risk of political gridlock and political lobbying and all that stuff? It feels like it's a really hard element of the thesis to handicap. So how do you build that in and then build the probabilities around that?
Yeah, so that's a great question. So the basic model is that you can do what we call a P times Q model. In analyst land, what this means is effectively the price or the average revenue per user collected multiplied by the number of scans or women screened. So you can do a P times Q, price times quantity. And so what you find with Volpara is that the business is actually growing really, really, really strongly without that kind of government-led catalyst. So even if that doesn't go ahead, more women are demanding this type of service when they go and get a scan. So the way we model this is quite simple, really. What we do is we make an assessment for how many scans, or based on a percentage of the market, Volpara can capture, and it has around 31% market share thanks to its latest acquisition, multiplied by the revenue that it can get from each scan. And how do you get to that? Well, you determine what's happened historically, and then you look at all of the things that Volpara is adding to the platform. Things like advanced risk modeling, artificial intelligence, better risk scoring. These are all things that lead to higher revenue per user. So even if this catalyst doesn't come along, I'm going to take that as the cherry on top. In the meantime, I value the core business, which is growing really, really well. So I'm happy to hold this. It is a more volatile company. There are risks. It does come with a lofty price tag. So keep all of that in mind. And I own the shares. So that could be a bit high.
Well, Owen, a few feel-good stories and companies coming out of our Watchlist Wednesday today. Unfortunately, we have run out of time, but it's been an absolute pleasure chatting to you as always, and we do thank you for sharing your thoughts on those companies. Just a reminder, it was Pinterest over in New York, Australian Ethical, and also Volpara. So have a look at those. And Owen, as always, a true pleasure, and we look forward to speaking to you again.
Thanks, guys. Appreciate it.
Well, that brings us to the end of another episode of Equity Mates. Really enjoyed that session with Owen. If you would like more information on Equity Mates, head to equitymates.com for more information, as I said. Otherwise, you can hit us up at contact@equitymates.com.
And tune in, same time, same place tomorrow. We'll be taking a break from ASX reporting season, and we'll be looking at some of the news stories that have caught our eye recently that may indicate longer term trends that are playing out and that may be investable, including a potential incoming second space race.
Wow. Heard it here first.
So tune in tomorrow. Can't wait to see you.